3 months ago, everyone was doubting Ulta's stock, saying that it wasn't a buy ultimately because it would not perform well in a recessionary environment, as everyone was super sure that we were going to be in a recession by the start of 2024. However, the story is very different, as in the last 3 months the stock has returned 24%, outperforming the S&P 500. Today we'll be looking at a clear market leader which has a wide moat, solid fundamentals, and efficiency ratios which are through the roof. So Ulta Beauty. For those of you that live in the US, you will probably of course know this company, but for those of you that don't, it is a beauty product retailer. In their annual reports, they refer to themselves as the largest specialty beauty retailer in the United States and the premier beauty destination for cosmetics, skincare products, and about 15 other product categories which I'm not going to mention. They have more than 1,350 stores, and the majority of them are located in convenient, high-traffic locations, in very popular malls, or just in city centers. They actually sell a huge variety of categories and different price points. So when you walk into an Ulta store, you can find some of the most exclusive products in the beauty niche, and you can find some of the most entry-level products. The thing that I love the most about this company is the following point, which is that 95% of their total sales come from Ultimate Rewards members. Ultimate is their loyalty program. For example, when you go to a Starbucks and you have the app, you accumulate points. Ulta has the same exact thing. And 95% of their sales come from repeat customers which are accumulating points, meaning that they are able to generate loyalty in their customers at an incredible pace. And this is what you want to look for in a consistent, predictable, monopoly style company. Another thing I love about them is that they are extremely clear with their growth strategy, and I have divided it into 4 different points. The first one is that they're focusing on improving their own private label. Apart from selling other labels, they are also creating a private label to benefit from higher margins and creating their own brand. And additionally, they want to improve the profitability by enhancing their assortment management. Next one is that they want to connect the physical and digital ecosystems to create more of an omni-channel strategy for a better experience for their clients. Then they want to use all their Ultimate Rewards data to improve personalized offerings. For example, now that they know that the majority of their sales come from these same members, they can launch promotions specifically to each member depending on what they buy more or not. And this would be great to improve the revenue per customer. And finally, they want to optimize their cost structure wherever they see it's possible. Their financial analysis looks amazing. They have one of the highest return on capital employed in the whole industry, sitting at 27%. And this number, ideally, you want to see it above 10%. So it being at around 27% is something unprecedented in this industry. So that's a great thing to see. They have an interest cover of around 1,000 times, which basically means that they essentially have zero liability risk. And then they have a great cash conversion of 110%. Next, their margins are also great. They have a 40% profit margin and a 16% operating margin, which are both very healthy, especially for a retailer where the margins are usually smaller, sitting at around 7%. You can see that the revenue has been growing consistently over the previous quarters. However, they have been struggling with their gross profit and their net income. They haven't been able to grow their net income at the same pace as the revenue. Their efficiency ratios are some of the best in class. As you can see, they're extremely stable all the way from the pandemic. And their return on invested capital is right now sitting at close to 32%, which is insane for a retailer. For their fundamental analysis, I give this company a solid 6 out of 8. There are 2 small issues which I would like sorted before I believe that this company is absolutely perfect to invest in, but let's just jump right straight into it. The first one is that they have extremely low liability risk, and in this environment of high interest rates, this is wonderful to see. They have an extremely solid balance sheet, and they know what they're doing to keep the company safe and healthy. They also conduct small share buybacks, which is good to see because it's decreasing the shares outstanding, hence improving the cash flow per share, earnings per share, and all those metrics, which is what the investor likes to see. Then they have organic revenue growth, as we have been able to see in the charts previously, and they have one of the biggest moats and competitive advantages that I have seen in retailing. This, of course, allows them to get some sort of pricing power, even though in retailing this is not very easy to do so. Why do they have this moat? Well, because of the numbers that we said, 95% of their total sales come from repeat clients. So this means that it is extremely difficult for other companies to come in and try to steal their customers, which for me is the definition of a competitive advantage or a moat. Now, the two issues I see is, first of all, their cash flow consistency. Especially in 2023, it hasn't been great. They have a lot of quarters with extremely high cash flow generation and some quarters with extremely low cash flow generation. I have looked into it, and even the operating cash flows are all over the place. And for organic free cash flow growth as well, the free cash flows have been growing for a long time. However, in 2023, there have been some weird things going on and their cash flows have been down a bit. In terms of the long-term analysis, I think this company has great growth potential as it follows secular trends. It's beautifully managing its customers' data through the Ultimate Rewards program. As we've spoken about, one of their main growth strategies is improving their data usage to offer a more personalized experience. So these are two secular trends. First one, the personalization of offerings, and second one, the usage of big data. And now to enhance their growth, improve their revenues and their bottom line, I think they have two avenues for growth. The first one is improving their current customer offerings, their revenues per customer and all that, which, as we have seen in their growth strategies, they are already implementing that, which is great to see. The second one, which I have not seen a lot of, is trying to attract new customers. Because if you cannot get more money from your current customers, you have to look outside and get new customers. And this is some point where I would like them to focus even more. Now, in terms of valuation, this company looks cheap in comparison to their historic averages. As you can see in PE ratio, it's one of the lowest it has been since 2020. And in terms of free cash flow yield, using the free cash flow from 2022, they are very cheap. Using Terry Smith's method of valuing companies through their free cash flow yield, comparing it with the long-term inflation rate. However, using 2023's free cash flow yield, it's not as undervalued since the free cash flows have decreased significantly this year. In terms of risks and possible challenges, I don't think competitors are a huge risk since I believe they have a huge moat due to their Ultimate loyalty program. In terms of regulatory risk, I doubt there will be any regulations passing on the beauty niche anytime soon, so I think they're safe on that spot. In terms of performance, not meeting performance objectives, this is the biggest risk I see, since I would like them to control and become more consistent at generating their cash flows than they are currently, before deeming this as the 10 out of 10 perfect stock. And in terms of market, I don't see it being a problem since I don't think there'll be a recession anytime soon, and I don't think that it will underperform in a recession. For the investment conclusion, first, please remember I'm not a financial advisor and this is not financial advice. Do your own research before doing any buys. I think this company has a moat with a strong competitive advantage. It does not have consistent cash flows since they are not predictable and are not resilient from what I have seen, but it does have a high return on capital employed, which means that the company is great at creating value for the investor. I would deem this company a good company, and I think it will be a great investment for the long term, especially if their cash flows improve over time. So thank you for watching. As always, this has been the Cash Flow Compounder. There's a link in bio for a free stock if you join Trade Republic or Trading 212, and there you can join free Patreon for extra content.